Hello everyone, this is part 2 of my trading plan. Last week, part 1 was all about setting goals. Where do you want to go with trading? What are you going to trade? How do you think you want to trade? Looking at time frames is the first step for you to, to, to know what you want to get out of trading. If you want to be a millionaire, of course, you're going to read more books, watch videos, talk with other traders. If you just want to pay the rent, like I said last week, it's also a possibility. Put in a couple of thousand and pull out 1,000 every month and then pay what you have to pay. Thanks a lot, guys. Thanks a lot for all the replies on Instagram. Very useful. I had a nice discussion with one of you guys on the direct message about the setting goals in the setting the financial goals. Someone said I disagree because setting financial goals will makes you take poor decisions once you see the week is ending or the month is ending and you're like, oh man, I gotta make a couple of hundred. I'm gonna take this trade. I agree 100%, guys. That's why I'm sharing this. I want to teach you guys. I want to give you an idea. Please shoot at me. Shoot at me. Give me your feedback. That's to me that's great. I agree. Focus on the process. I said it in the plan, and I said it in the YouTube video as well. Focus on the process is the number one thing. But I think you have to point something out in your agenda on your calendar that in 5 years you want to be a millionaire, a multi-millionaire. You want to have half a million. You want. I think moving in life in general, without a goal, you're just gonna, do what you do all day. Come home, watch Netflix, lay around. You know what I mean? Goals. That's to me in my life that made me financially independent and that brought me a lot. I ran a marathon last year because in January I said, let's go guys. I wanna see what I can get out of running. In June I walked a half marathon. In October a whole marathon. Goals. Very powerful tool. A lot of things I can say about that. You can read about that. Great. Let's get to the plan for now. Short review of part 1. Now we go into part 2. Trading plan. Reading the charts. Now we are going into trading. The general question, the central question in this one is what moves the markets? As you may have seen, there are certain waves, certain patterns, certain things you can see in the market. When you just start out trading, you look at the chart and you see a bar or a line that goes up, and you're like, okay, this price is going up, let's buy. When you start to when you understand how to look at those markets, those decisions can often be decisions that you start buying at a point that all the professionals know this is exactly the point where price is going to turn and it's going down, it's going down, it's going down, and this is exactly the point where price will reverse again and move back up. Now, where do you want to buy? What do you want to buy and look at your negative income for 3 weeks and then it finally moves around? You have to wait 3 weeks to break even and then you start over again. That's not what you want. So, what moves the markets? Very short. Technical analysis, fundamental analysis. I will fill my YouTube and Instagram account with everything there is to know about technical analysis, especially technical analysis. To me, it's not technical versus fundamental analysis, but for me, it's 80% technical analysis, and of course, I want to know fundamentally what's going on with companies and what's going on in the economy. Will the interest rate rise, or a new president, war? Of course, yeah, you have to know a lot about those things as well. But I'm gonna explain why technical analysis is so important. What's the difference between different time frames? You'll understand that the time frames on the weekly are way more. The information you can read on there is way more reliable than the information on a 5-minute chart. When we see higher highs, lower lows, or certain price action on the weekly time frame or the daily time frame, those lines really mean something. And to me, I know a lot of people disagree, but when you zoom in all the way to the 5-minute or maybe the 1-minute charts, that's not my cup of tea because it's too crowded, too much volatility. It's not my thing. But there are a lot of traders that are intraday traders, day traders, and they love the volatility and they go in big and they go out just a couple of points above or below their price, and that's a strategy as well. But the fact is, you have to know what's the difference. What can you read on the time frames? No matter if you trade the 5 minutes, believe me, you also want to know what's going on 5 minutes, on the weekly or the daily. The general trend, that's information you want to know as well. Indicators, well, that is something we are going to end part 2 with, I think. I think moving into part 3, that's really gonna zoom into indicators, because those are tools that will help you. But reading the charts just by watching price, candles, support, resistance zones, etc., that's what we look into first. To answer the question, how can you read price patterns? That's what this week's training will be all about. And I will try to explain as well a little something about the psychology of trading, because the fact that a support or resistance zone holds is because the psychology of all people look at that. When we see an uptrend, we want to go long, and once price pulls back a little bit, we professional traders wait. Then we see a certain level, a trend line, or a Fibonacci retracement, whatever, and we all go. So that's the thing, the psychology of the market of trading. But let's get into that in more detail. Price action. I can talk for weeks about price action. For now, I want to go through the fundamentals of a trading plan. This is a picture of trading view where I do my analysis. Price action, higher highs, lower lows. As you can see, even if you're a professional or not, there is something going on here. The market has been moving sideways over here. Then we saw a break of a certain zone, and price started moving. For some reason, price bounced and pulled back, but it didn't pull back as far as here. So we see a higher low, and of course, once we broke out of this, we see a higher high. Then price started to move up again. We broke this high, and we came into this high. So we have another higher high and another higher low. As you can see, price really started moving after this, because I think some people were uncertain. It's just one higher high, higher low, everything can happen. We saw the second, not that big of a difference, not that convincing as well. And then we saw a little indecision over here, and then boom, price started moving. Some sideways movement over here, some indecision, a little pullback. No, but there was a lot of room to the previous low, so people were still convinced that this was still an up move, and we see that price came into this area and then moved away very strong again. Same pattern, the high, the low, and price moved again and beyond. There will be a time in the future where we won't see another high, and we actually see a break of the previous low, and then we are talking about a reversal pattern, because price will move lower for some time. That can be fundamental, that can be technical, but this is a little bit about price action. If you just look at the chart, you can see where trend is going. If you're a professional or not, I don't have to explain you guys that if you want to make money in this market, you have to buy. Looking at this picture, someone who thinks I'm going to sell this for the long time, there are also people who are trying to profit from these moves. That's okay. But if you think, well, let's sell this one big and I will take my profit around 133, that would be a very stupid idea looking at this chart. So that's just no indicators, nothing, just looking at the charts, pure price action. The multiple time frames. This picture shows the 15 minutes, 1 hour or 4 hour. Here you can see some different trading styles that look at different time frames, and they look at different entry time frames, and the holding time is of course different. Positional tradings, they are looking for a nice place to buy. Probably they can watch the weekly, they can do it on the daily as well if you ask me, but they are willing to hold a position for a couple of weeks, and of course they will have huge profits, but it takes time. On the other way, people who are in the day, they are looking for a couple of nice short trades. They take the profits for that day, and they move out, and that's close of the day. Me personally, I love to swing trade. Like I showed in the previous picture, this is what I'm looking for. Another move up, then it pulls back. Then around here I start adding again, and I want to ride it. I come back, I see the price is turning. I'm gonna add to my positions. Once this breaks, I'm gonna add even more, and then ride it again. I'm a swing trader, so that's what I like. Again, for you guys, I don't care what you trade or how you trade, uh, as long as you know why you are trading and what you are trading. You don't want to look for a positional trade to hold for weeks and then make your decisions on a hourly or 5-minute chart. That's not the way things work in trading. Then we go to support and resistance. As you can see, that's the psychology I talked about earlier. Price moved over here, moved away very strong, then moved over here and moved away very strong again. But as you can see, once price came back into this previous low, it bounced again, and then it came back into this previous high. Exactly, you see, it bounced again. So markets don't just move; they move in patterns, and we all look at these charts. So I am looking at this level. Once price comes down, I am willing to take trades around this area, but my stop loss will be below this area, because once that breaks, we will potentially go down. The same goes for the upside. I can go short around this area, but my stop loss has to be above here. This is a great range trade, if you ask me. I love to range trade as well. Swing and range trading is very clear. Without the candlesticks, here you can see a simple line chart. Price moves up, price moves down. It respects this area, as you can see. Comes back up. It's never exactly to the point the same price. So you see in this zone, price bounces again, but here it breaks. It makes a new high, and then it comes back again. Then we see, when we look in the past, that this area is still an important area. Even all the way down here, and we come back up here, it's still an important area. So to me, the first thing you have to do is look on the weekly, look on the daily, start drawing lines that you think, hey, price has moved into this zone a couple of times. Then you start reading the charts properly. You can imagine when this is moving up, someone who doesn't know how to trade thinks this is moving up strongly, let's buy. Bang, I'm buying, and it goes down. You know, same goes over here. This is a strong move. I'm gonna buy. Bang. It goes down, it goes down, it goes down. You probably broke around here, and then here you think, this has been going down so long. Let's go short. Bang. It moves the other way around, and that's how we as professionals look at the market, and that's how people who don't know yet how to trade look at the markets. So support and resistance. Another one is trend lines. I showed you guys in a couple of slides ago that when we see higher highs and lower lows, we are in an uptrend. Same thing goes, lower lows, lower highs, we're in a downtrend. This is no rocket science, guys. You don't have to be Einstein to understand that the market is going up or going down, but you have to know what price action is, and you have to know how to look at just price. What do you see here? Here we see a small uptrend, then we see a break of certain levels, we see it moving down, moving up. Here we don't see nothing at all. It's a sideways trend, and this is a very convincing uptrend. It's great if you can ride this one. Probably you enter around here because it breaks these previous highs. You start riding this trend, then here you don't know what's happening, so probably around here you start. I think probably around here, when this low breaks, you would leave the trade, but let's get into that another time. This is an uptrend, a downtrend, an uptrend, a downtrend, sideways markets. Trend lines, guys. Just draw them in, just like the horizontal lines, and you start looking at charts totally different. Then we have the candlestick patterns. This is way much to talk about, and I suggest you guys get into this by reading some articles about it, or some more YouTube videos. I will most definitely be telling you guys more about all the single patterns, or just a video about candlesticks patterns as on their own. As you can see, often it's quite obvious. This for example is a move. This candle moved to the upside, but you can see in the same candle that it also came back all the way down here. So when we see a spike like this, this can tell us that price is already moving lower in the next couple of bars. Yeah, I can go in a lot of things. These are just the pictures on themselves, but you can see here my price was going down, and then here it was going down, but in the same candle we can see that price was already reversing. Then we see that the candles, oh sorry guys, the candles were crossing. You can see here this one goes lower, this one goes lower, this one goes lower, this one goes actually higher. So this pattern, this spike and this move to the upside, this combination tells me that hey, price may be shifting. Candlesticks, write it down right now. Candlesticks, put it on your phone. Candlesticks, you gotta know what these candlesticks mean. I think my trading plan is, I think, like I said in the previous training, I think you know what a pip is. You know, I think you know what's going long or going short is. If you don't, please leave a comment. You know, maybe I should make a video about that. But the red candles are bearish, the green are bullish. You know, I expect you guys to know those things. So just to go into more detail, I think candlesticks are very important. Same thing here, chart patterns. What we see here is a move up, a move lower, but not a lower low. Then we move back up, so this is a high. We think right now we're still on an uptrend. Then we see the price moves lower again. So for the third time we reach this support zone. That's, to me, an indication that price is losing upward momentum. Then we see a move to the upside, but we don't reach the previous high. We don't break the previous high. So this is called a head and shoulder pattern. This is the head, two shoulders and a neckline. Then price moves into this support zone again, but it still holds. Another move to the upside, but not yet. If I would draw a trend line, I would put one in already. Around here I start thinking maybe the uptrend is over. I close my longs. Maybe we should go short. I reverse my trades and go short. Of course, when I enter around here, my stop will be above the previous shoulder, because we don't want to see higher highs when we are going short. And then we see a break of the neckline and price actually is moving lower. This is a head and shoulder pattern. There are bull flags, bear flags. There are a lot of different patterns. All patterns that will tell you that a trend will continue, a trend is stalling, a trend is actually reversing. Study the patterns that tell you when to go long, when to go short, and all that. Again, guys, I will go into these things in more detail, but I wanted to tell you in this video that having a plan, of course, is very important. Last week I helped you guys to think about what are your goals, what do you want to get out of trading, and today I want to show you that there is a way of looking at the markets. I remember talking to a guy a couple of days ago that told me, oh well, you know, I'm into investing, and yeah, I make a couple of hundred, maybe sometimes €1,000. And we started talking, and I said, how do you look at the markets? He said, well, if I see a strong up move, I buy, and I hope it's going to go up even more. And I was like, okay. Well, maybe you should check out my Instagram, and if you understand what I'm saying on that channel, I think maybe we could go out for a drink and talk some more about trading. 30 minutes after, he called me and he said, dude, what the hell are you talking about? Technical analysis, head and shoulders, bulls and bears, long and short. Well, that's the difference between a professional trader and someone who doesn't know how to trade yet. I hope this video gave you a little first insight into what it means to actually read the charts. I will be busy this week to show you guys in different videos how a head and shoulder pattern is formed and how to trade it, as well as some videos about horizontal lines, chart patterns. I will make some videos for all these slides that I pointed out so far. Thanks for watching. Please leave your comments, your likes, everything. I really appreciate the support. See you in the next video.